How does the CRA track foreign landlords with Canadian rental properties? If you're a non-resident earning rental income from Canadian property, you might assume that because you live abroad, the Canada Revenue Agency, CRA, won't know what you're doing, but that's a risky and expensive assumption. The CRA has become highly effective at tracking foreign landlords, even those who rent out property part-time or casually. In fact, with today's technology, financial reporting agreements, and third-party platforms, the CRA is more equipped than ever to detect non-compliance. Here's how they do it, and why ignoring your tax obligations is not a safe bet. Property registration and land title records. First and foremost, every property purchase in Canada is documented in the provincial land title system. Your name, country of residence, and mailing address are recorded in the public registry when you buy property. These records are fully accessible by the CRA, so even if you live in the US, UK, China, or elsewhere, the CRA knows that a non-resident owns the property, and if no tax return is filed, it raises a red flag. Information from financial institutions. Canadian banks and mortgage lenders are required to report account activity and large transfers, especially those tied to non-resident accounts or international wire transactions. If rental income is being deposited into a Canadian bank account, the CRA can use financial data to spot inconsistencies between rental deposits and reported income. Even if funds are sent abroad, intermediary banks and wire transfers may leave a paper trail. Platforms like Airbnb and property managers. If you're renting through Airbnb, Vrbo, or Booking.com, those platforms may be required to share transaction records with tax authorities, especially under new transparency rules. Similarly, licensed property managers in Canada are obligated to collect and remit 25% withholding tax on rent, file forms like NR4 slips for non-resident clients, maintain records that can be audited. If you skip filing, but your property manager is submitting tax forms on your behalf, the CRA will see the mismatch between reported rent received and no return filed. International tax agreements and information sharing. Canada is part of several global agreements, including the OECD's Common Reporting Standard, CRS. This means that many countries now automatically exchange financial information to catch cross-border tax evasion. If you're receiving rental income from a Canadian property and reporting nothing to the CRA, your local tax authority might already be sharing that data with Canada and vice versa. Online listings, municipal records, and more. Yes, even your online rental listing can work against you. In some provinces, municipalities now collect data on short-term rentals. If your unit is listed on public platforms and there's no corresponding tax filing, the CRA may investigate. They also cross-check property tax records, utility bills, occupancy permits, insurance records, rental license applications. Bottom line, if you think you're invisible to the CRA, you're not. And the penalties for getting caught are far more costly than filing properly in the first place. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.